How to get instant business loans fast. By avibusinesssolutions.com. Cash flow problems rarely give a week's warning. Payroll is due Friday, inventory needs to be restocked now, and a slow-paying client is still sitting on your invoice. If you're searching for how to get instant business loans, the real question is usually simpler. How do you get capital fast without creating a bigger problem next month? The answer starts with knowing what instant actually means in business funding. In most cases, instant does not mean money appears in your account the second you apply. It usually means a fast online application, a quick review process, same-day approval in some cases, and funding as soon as that day or the next business day. That speed is possible, but only if your business profile matches what fast lenders are built to approve. How to get instant business loans without delays. If speed matters, preparation matters more. Most business owners lose time not because funding is unavailable, but because their application raises questions. Missing bank statements, inconsistent revenue, unclear ownership details, or a business checking account that does not match the application can all slow things down. The fastest path is usually straightforward. You identify the funding type that fits your need, gather the core documents before applying, and submit accurate business information the first time. Lenders moving quickly are not doing less review. They are using streamlined systems to verify revenue, time in business, bank activity, and basic risk signals faster. That means you need to think like an underwriter for a minute. Can your business show regular deposits? Can you explain your use of funds clearly? Is the requested amount realistic given your monthly revenue? If those answers are solid, your chances improve. What lenders look at for instant business loan approval. Fast business lenders care less about perfect paperwork than traditional banks, but they still want evidence that your business can support repayment. The biggest factor is usually revenue if your company brings in steady monthly sales, which often carries more weight than a spotless credit score. Time in business also matters. Many lenders prefer at least 3 to 6 months of operating history, while others require 1 year or more. A newer business can still qualify, but the options may be narrower and the cost may be higher. Your bank activity tells a story why too. Lenders often review recent business bank statements to see whether deposits are consistent, whether your account is frequently overdrawn, and whether your cash flow supports the payment structure. If your revenue is strong but your account management is messy, expect extra scrutiny. Credit still plays a role, but depends on the product. Some instant funding options are more flexible for lower personal credit scores when the business's revenue is healthy. Others price risk aggressively, which means approval may come fast, but the repayment terms may be tighter than expected. The fastest funding options for small businesses. Not every loan product is designed for speed. If you need capital quickly, some options are more practical than others. Short-term business loans are among the most common options for urgent funding. They are often used for payroll, inventory, repairs, marketing pushes, or temporary working capital gaps. The application process is usually faster than a bank term loan, and decisions can happen quickly if your revenue profile fits. Business lines of credit can also be a strong option when the issue is flexibility, not just speed. Instead of taking one lump sum, you access funds up to a limit and use only what you need. For businesses with recurring cash flow gaps, this can be smarter than repeatedly applying for new financing. Merchant cash advance style funding is another fast option, especially for businesses with strong card sales. It can move quickly, but this is where trade-offs matter. The convenience is real, but the cost can be high, and repayment tied to daily or weekly sales can pressure cash flow if revenue drops. Invoice-based funding may work if your issue is slow-paying customers rather than low sales. If you have strong receivables, this can convert unpaid invoices into usable cash faster than waiting 30 to 90 days for payment. The best product depends on why you need the money. Fast funding for inventory before a busy season is different from fast funding to cover chronic operating losses. One is often strategic. The other can be a warning sign. Documents that help you get approved faster. If you want to know how to get instant business loans with less back and forth, get your documents ready before you start the application. In most cases, lenders want recent business bank statements, a valid government ID, business formation details, and basic information about your monthly revenue and time in business. Some lenders may also ask for voided checks, merchant processing statements, or proof of ownership. If your business is seasonal or your recent numbers change sharply, a short explanation can help. Speed improves when a file makes sense at first glance. Accuracy matters as much as completeness. Your legal business name, address, tax details, and bank information should match across documents. Small mismatches can trigger manual review, and manual review is where fast funding often slows down. Common mistakes that slow down instant business loans. One common mistake is applying for more than your revenue can support. If a business makes $12,000 a month and requests a large funding amount with no clear repayment path, lenders may decline or counter with a lower offer. Asking for a realistic amount saves time. Another issue is stacking applications everywhere at once. It may feel efficient, but multiple inquiries in a short window can make your business look desperate for capital. Some lenders also view existing daily or weekly payments as a major risk factor. If you already have several advances or loans, your options may shrink quickly. Business owners also get delayed when they mix personal and business finances too heavily. If all revenue flows through personal accounts, the lender has a harder time evaluating performance. A dedicated business bank account is one of the simplest ways to look more fundable. Then there is the use of funds problem. Saying general business purposes is not always wrong, but clear explanations help. Inventory, equipment repair, staffing, marketing, expansion, or covering a temporary receivables gap all sound more grounded than a vague request for cash. How to improve your odds before applying. If you are not in emergency mode, yet a little preparation can move you into a stronger approval tier. Start by cleaning up your business banking. Avoid overdrafts, keep deposits consistent where possible, and separate business transactions from personal spending. Next, know your numbers. You should be able to state monthly revenue, average daily balances, major expenses, and how much capital you actually need. Fast lenders value clarity because it reduces review time. It also helps to apply through a solutions-focused provider that understands multiple funding products rather than pushing one rigid option. A business with solid card sales may fit one product well, while a company with reliable invoices or broader operating history may fit another. Matching the right product to the real situation is often the difference between useful funding and expensive stress. For many small business owners, that is the real value of working with a company like AVI Business Solutions. Speed matters, but fit matters too. Fast money only helps when the structure supports the business, not when it squeezes it harder. When instant business loans make sense, and when they do not. Fast financing can be a smart move when the capital solves a short-term problem with a clear return. Covering payroll before receivables clear, purchasing discounted inventory, repairing critical equipment, or funding a marketing campaign with measurable upside can all make sense. It becomes riskier when the loan covers deeper issues such as shrinking margins, unstable sales, or long-term operating losses. In those cases, instant funding may relieve pressure for a week or two, but it may make the next month more difficult. Quick approval does not cancel out the reality of repayment. That is why the best borrowing decisions are practical, not emotional. If the funding gives you room to produce revenue, protect operations, or capture a near-term opportunity, it can be useful. If it is only delaying a larger problem, pause and reassess. Choosing the right lender for speed and value. The fastest lender is not always the best lender. Look at the total repayment, payment frequency, prepayment flexibility, and the level of transparency of the offer. Daily payments may be manageable for some businesses and brutal for others. A higher cost product can still be worth it if it solves an urgent, profitable need, but only if you understand the math. Good lenders and funding partners make the process clear. They tell you what is needed, how long the review takes, what the repayment structure looks like, and whether your business is actually a fit. That kind of clarity saves time and prevents bad decisions made under pressure. If you need capital quickly, move fast, but do not rush unthinkingly. Have your documents ready, know your revenue, ask for a realistic amount, and choose a funding option that matches how your business actually earns. The right loan should give you breathing room and momentum, not just a temporary patch.
Running a small business means being ready for anything. But what happens when the big banks say no? At AVI Business Solutions, we say yes.